Hey everyone, and welcome. Have you ever wondered how to make your money work harder for you instead of the other way around? Today, we're going to demystify the exciting world of stock market investing and give you the foundational knowledge to get started on your path to financial growth. So, what exactly is the stock market? Well, it's not just some abstract place where numbers flash on a screen. At its core, the stock market is where pieces of actual companies are bought and sold. When you buy a stock, you're not just buying a digital token. You're buying a tiny ownership slice of a real business with real employees, real products, and real potential for growth. Imagine owning a piece of your favorite coffee shop, tech giant, or clothing brand. That's what we're talking about here. Now, before we even think about buying those company shares, let's talk about making your initial money grow, even if it's just a little. The very first step to potentially 10x your money in the long run is to make sure your emergency savings and short-term funds are in the right place. And that place is a high-yield savings account. Why? Because while a typical savings account might earn you a measly 0.39% interest, a high-yield account could be giving you around 3.5% or more. That's nearly 10 times the return. All right, let's dive into some key terms you'll hear often. Don't worry, these aren't as complicated as they sound. Stock, a unit of ownership in a company, shareholder. That's you if you own stock, a part owner of a company. Brokerage account, your special bank account for buying and selling stocks. Portfolio, all the investments you own collectively. Diversification, spreading your investments across different companies or industries to reduce risk. Index fund mirrors a market index like the S&P 500. ETF, exchange traded fund, similar to an index fund, but it trades like a stock. Dividend, a payment made by a company to its shareholders. Bull market, when the market is rising. Bear market, when the market is generally falling. And now for arguably the most powerful concept in investing, compounding interest. Imagine a tiny snowball starting to roll down a hill. At first it's small and slow, but as it rolls, it picks up more snow, getting bigger and bigger. And the bigger it gets, the faster it rolls, picking up even more snow at an accelerating rate. That, my friends, is compounding interest with your money. Your initial investment earns returns, and then those returns also start earning returns. It's an infinite money loop. Understanding these basics is your first step. Remember, investing is a marathon, not a sprint, and patience truly pays off. Stay tuned for more tips. Happy investing.